ETF for beginners. Welcome back to our channel. Today, we're diving into the world of exchange-traded funds, or ETFs. In a nutshell, an ETF is a type of investment fund that's traded on stock exchanges, much like individual stocks. But what makes them unique is their ability to hold assets such as stocks, commodities, or bonds and, through that, offer diversified exposure to investors. For beginners, understanding the basics of ETFs is crucial. And that includes knowing about the three main types. So, let's break it down. First up, we have the basic S&P 500 ETFs. These are like your entry point into the world of ETFs. By owning just one share of any S&P 500 ETF, you're essentially owning a slice of the 500 largest companies in the US. Examples of S&P 500 ETFs include VU, SPY, and IVV in the US, and VUSA and ETA.GB in Europe. Next, we move on to Nasdaq 100 ETFs. These focus on growth companies and offer exposure to the 100 largest firms listed on the Nasdaq exchange. By owning one share of any Nasdaq 100 ETF, you're essentially investing in some of the most dynamic and innovative companies out there. Examples include QQQ, ONEC, and QQMG in the US, and E2 and CNDX.GB in Europe. Finally, we have the all-in-one ETFs. These are like the Swiss Army knives of ETFs because they offer diversified exposure to stocks from around the world. This means you can invest in one ETF and have instant exposure to various markets, sectors, and regions, which can act as your entire portfolio. Examples include VT, ACWI, and VIGI in the US, and VEVE and PRIW in Europe. Remember, when it comes to investing in ETFs, it's essential to do your own research. Consider factors like your risk appetite, investment goals, and time horizon. Also, keep an eye on the expense ratio of each ETF, as this can affect your overall returns. And if you found this video helpful, don't forget to subscribe and hit the like button to support our channel.